Hello and welcome back. After 2 days of a significant sell-off in Nifty, finally Nifty is finding some support around 18,650 mark because in last two sessions we have seen Nifty drifting lower from the levels of 18,880 odd levels to close to 18,650 levels. So it's a good drop that we have seen in last 2 days. But for last two sessions, we have also seen that Nifty is quite resilient to go below 18,650 mark. So this seems like a good support for the index in the very short term. If for any reason Nifty breaks below 18,650 mark, then we are likely to see Nifty finding next support around 18,570 mark and 18,500 on the lower side. 18,570 is the 26 days exponential moving average of the Nifty. So that is likely to be the next support if in case Nifty breaches 18,650 mark. On the higher side, immediate resistance for the index is placed around 18,750, 780 mark. Because for last 2 days the index has not been able to move above those levels, and after that next resistance would be close to 18,880, 890 levels, which has been acting as a very strong resistance for the index for last few days. So we need to see how we get the global cues, because we are approaching the monthly expiry of the index future and options contract of the June series. So we need to see how things pan out, but broadly speaking, these are the levels that we need to watch out for as far as support and resistance are concerned. As far as trend is concerned, there is nothing to suggest that the up move has ended and there is some sort of negative movement that is taking place. So there is no indication of that type. So broadly speaking, on the trend front, the index is quite positive on daily and weekly chart also. Even if we look at the hourly chart of the index, we have seen that the index has been witnessing quite a sell-off in last few 2-3 days. So this is the level I was talking about, 18,650, which is acting as a good support for last few days. So broadly speaking, the broader structure of the index is quite positive. In the very short term, there could be some pain, or I should say some price consolidation in the index, but the overall undertone of the index is still positive. So there is nothing to worry as far as trend of the index is concerned. As far as Bank Nifty is concerned, we have seen mild drift in the index from the levels of 44,000 to 43,600 odd levels. And the index has been finding good support around 43,400 mark. So we need to see how things pan out going forward. But if we take a look at last few days action of the bank index, it is clearly showing that 43,400 has been acting as a good support. On the higher side, the immediate resistance for the index is placed around 44,000, and after that the next crucial hurdle for the index would be around 44,400 mark. And index has been really struggling to surpass this crucial hurdle of 44,400. So for any reason, if index manages to surpass above 44,400 mark, then we are likely to see the fresh leg of up move starting in the bank index. So we need to see how things progress here, but trend wise there is nothing to suggest there is no reversal indication on the chart. No doubt that there has been some averages. We have seen there has been some convergence in the index as far as averages are concerned, but broadly speaking the trend is still intact, and nothing to worry, or no sign of reversal on daily or weekly chart. So we need to see in the very short term, we need to see 43,400 level, which is likely to act as a good support for the index, and after that next support would be around 43,000 mark. On the higher side, like I said, 44,000 would be the first hurdle, and after that 44,400 would be the second hurdle for the index. So broadly speaking, both the indices are likely to see some kind of consolidation. There could be some choppy moves that are taking place as we approach the expiry of the June series. But broadly speaking, the undertone of both of the indices is still quite strong as far as technicals are concerned. Standard warning: please note that investment in securities market are subject to market risks. Read all the related documents carefully before investing.